Coca-Cola reports Q2 earnings tomorrow before they open. The stock carries a massive 85% FSR, one of the cleanest pre-earnings quantitative setups on a mega cap stock right now, but a sudden ransomware recovery just threw a wild card into the chart. Here's the audited data. Looking at the 1-year daily chart, FSR Score sits at 85% with an average rolling FSR pinned at 97%. For an entire year, our predictability model has recorded remarkably structured trading in Coke, but the price has systematically trended from $65 to nearly $84 while maintaining its stability line well above historical standards. This indicates heavy institutional backing and high conviction heading into the report. Now look at the real world catalyst. Coke is a dividend king with a 2.5% yield, outperforming the S&P 500 up 24% over the last year. Barclays maintained an overweight rating and bumped their price target to $91, while Argus named it a primary beneficiary of Summer World Cup consumer demand. The main wildcard was a cyber attack that hit its fairlife dairy division, but just hours ago Coca-Cola confirmed that fairlife has officially resumed the majority of US production with minimal impact on retail availability. The market is taking that news in stride, pushing the stock up nearly 2% today. Here's the bottom line. The quantitative model shows extreme structural integrity backed by analyst target upgrades and a resolved supply chain threat. Subscribe for a post-earnings stability check. FSR is not a buy or sell signal, it's a data audit. All this data can be ran at predictability-api.com. Link is in the description. Thanks for stopping by. We'll catch you in the next one.